That's what the SGX Nifty is also suggesting. Siddarth Bhamre of Angel Broking is also with us. So let's take a shift from fundamentals once again to the technicals. Siddarth, hi, good morning. The internal that troubled me the most was so much buying in index options, and we saw those 1 lakh long positions getting added in index puts. What does that tell you about the bearish trend of the market now?
Good morning, Sonia. I would like to differ with the comment that it's a bearish trend. We are slowly drifting down. It's not a one-way fall. Yes, you're right in your observation that there's huge build-up in put option, but I think that is just one side of the coin. Even in calls option like 78, 8,000 and 8,200 call option, there was significant build-up. So if out of 100% build-up yesterday, I can understand 60 to 65% of build-up is in put option, but even call option has been bought. I would like to add, what is happening from FI's perspective. So we all know that they have bought 4,000 crores of index options, and as I pointed out, it is blend of calls and puts, more of puts. They haven't sold in they haven't sold much in index futures, and neither they are selling in cash market segment. I think this yesterday's fall led by China, it was just a flash in pan. I don't expect there is a huge fall in weighting. I'm not saying that market is very bullish, but immediately now people will start talking about how Nifty is moving towards 7550, and breach of that resistance will also happen. I think 2 weeks back, same people were running same story, and then we saw a huge bounce. We would see consolidation in market. I think 7700 is a very key support level. I don't see market in any hurry of breaching that support and making new lows anytime soon. So I won't be very skeptic on market just giving weightage to yesterday's fall. Yes, it was a severe fall. In larger scheme of things, last 3-4 months we have seen that volatility in market has subsided. That's the reason 2% fall is looking as if there was a circuit. So I would suggest people not to get panicked by yesterday's fall and not start thinking about new lows as of now.
All right. Well, to justify that, you have a couple of buy calls, in fact 3 buy calls. Let's start with Idea that got a pasting yesterday. Yeah, Lata.
So yesterday, I think if I'm not wrong, because of that penalty decision on telecom, most of the telecom stock along with markets corrected. Again, interesting thing here, no formation of short positions. Volumes in Idea compared to the kind of fall, compared to volatility in market, I would say the downfall in market, cash based volumes were not very high. Stock has good support around this 130-135 zone. I'm expecting good base formation over here. In fact, stock has been forming kind of base between 130-135. Bounce back is expected. I'm expecting this bounce back to breach its recent resistance of around 140-142. It has some resistance. Even that resistance would be breached, and I'm expecting it to go further up to 152 odd levels. So I would suggest fix the stop of 129 and go long in Idea. I'm liking Arcom and Bharti at this point of time, but the risk reward ratio is appearing quite favorable in Idea.
Okay, that's interesting. That stock was one of the big losers yesterday. But what about CESC? You have a call over there as well?
Yeah, so this stock, though has not given a huge upside move, but in this volatile environment, we are seeing it's quite relaxed. Last 2 trading sessions, we have seen some increase in activity in cash market. Before that, around 510, 515, we had seen huge formation of positions, but directions were not clear. And in this kind of market, if someone is forming huge positions around those levels and stock is actually going up, say 2 to 3% from those levels, then that doubt is clear that these are more or less long positions formed by some stronger hand. So we would like to follow those people, and I suggest to form long position. I'm not expecting a huge run up in CAC, but probably from a week perspective, the stock is heading towards 548, 550 odd levels. So I would fix stop loss around 506 and go long here.
All right. It's time for the multi-bagger idea of the morning, and Prakash Dewan is waiting by with that one. For Seco, that's the stock.
That's right. In fact, it's a challenge in these markets to come up with, especially mid caps, which can kind of take the beating on the chin. And what I've finally done is chosen a company which is a true-blooded MNC of sorts, and I believe would offer very good downside risk management as well. I mean, it has a 52-week low and a 52-week high, which just spans about $400, with 1,000 and 1,400. So it's a very nice range that it's available in. In fact, given the characteristic, this company looks like a delisting candidate. Promoters would love to get out of it and enjoy the dividends for themselves. It's a 900 crore market cap company with a revenue to the top line of about 263 crores last year. But this first half of FY16 itself, they've done about 150 crores, and they could probably end up with 300 crores plus. One of the reasons why this is a unique company is this has been around as a business for the last 75 years. It's present in 32 countries. It has facilities in any developed nation, and you name it, whether it's Japan, South Korea, China, US, UK, Germany, France, of course India as well. So this was part of what is called the Vesuvius Group, Vesuvius PLC. So it's had a lot of M&A activity, and finally it's become what it is today. It's no more called Vesuvius in any of the nations, but it has this, and FOSECO stands for Foundry Services Company, FOSECO. That's how the acronym was developed, because it exclusively caters to consumable products which go into the foundry business. And foundry, if you understand, is the heart of any economy's engineering side of the activity, whether it's castings or whatever you see being made. So for example, this company caters to a few segments like automotive, of course, and that's why it's in Pune. So Bharat Forge happens to be one of the biggest consumers. Construction, heavy engineering, heavy machinery, general engineering, mining. So all of these activities which we are talking about picking up as and when it happens, will see a very clear demand for this, and it's almost like a monopoly. In fact, when they set up the Puducherry plant, it was out of sheer compulsion by clients saying, please get us the raw material for what we need. Otherwise, we are kind of running short of our scale up. And if you look at financials, it's an almost zero debt company. 0.04 is some sort of this thing. The working capital cycle is just 100 days, which in an engineering business is I have not come across in the last many years. People are willing to pay you within just 3 months of order, which is excellent. The first half of this year, they've already clocked an EPS of 28, where last year, the whole year, they were about 38 rupees EPS. So that's also, the operating leverage is very, very clearly visible here. And the margins are mouth-watering. At the operating level, they actually clock about 18 to 19% and an ROC of about 36, 37%. And an engineering company at that. I mean, this works like an FMCG, but in the engineering space. So I think it's very clear. And if you see the company's website, they really don't want to share anything. There's just one page and that's it. So it very clearly shows that the company is just doing what is basically required mandatorily. Otherwise, they wouldn't want to share anything, because it makes sense for them to just take it off the exchanges and enjoy the dividend. The dividend history has always been 200% plus. So of course, the price at which it is, the yield might not be very attractive, but for people who chase dividend yields, it's very promising. Of course, FI holding has marginally gone up in the last 2 quarters as well. I think retail investors also could probably dare to get in. Just be careful you don't kind of buy on tops. Wait for these good companies to kind of react, give you some opportunities to enter, but accumulate over a period of time.
All right, so that's one long-term idea for you. For FOSECO India, a target price of 1,880. That's a big upside to the current market price. Thanks, Prakash, for that. Well, let's get you some more trading ideas now in our segment Super 6, and then we'll come back.
I would recommend ICICI Bank.
Okay, those are some trading ideas, but we just cannot get enough of long-term fundamental ideas, can we? We'll take a break. When we come back, it'll be time for our very own research head to come up with his small cap big idea. Stay tuned.
CNBC TV 18, celebrating 16 years of business leadership.
Welcome back. Okay, we promised you before the market opens our own small cap big idea, where our head of research Varinder ferrets out those small companies that you will miss, but he won't, for their solid fundamentals, bankable managements, companies that are likely to be the next big thing. So what's the next big idea?
Well, Saurashtra Cement is a company, market cap of only 360 crores, a flagship company of Mehta Group, which was formed in 1956, so not a new company. They market cement under the brand name of Hathi Cement. The Mehta Group also owns Gujarat Siddhi Cements, which is listed entity. Now, if you look at Saurashtra Cement, what actually attracted me towards this company was the valuations. It's the cheapest stock you will find in the cement space, with no debt and return on equity over 40%. Imagine this company is available at a valuation of only $35 per ton, compared to a replacement of anywhere between 90 to 100 per ton. So that means this company is available at 1/3 of the replacement cost in the market. Now they have a 1.5 million ton plant, which is located at Saurashtra coast, which is very close to Ambuja operations. They export really 0.225 MTPA to Sri Lanka, which is by sea. The freight cost, if you just check via sales as a percentage of sales, is the lowest among all the competitors because of the sea advantage what they have. The company has a limestone for 3 times the current capacity. They have a mining lease which is running until 2041. So if you're worried about the limestone, the raw material, the limestone and the mining lease, that is also secured by the company. Look at the earnings of this company. For FY15 consolidated, sales were up 5%. EBITDA was up 54% for this company. Margins improved from 10.9% to 15.9%. Reported profit was 67 crores compared to only 20.9 crores, and adjusted profit was 41 crores. FY15 consolidated EPS was nearly 8 rupees, and the company reported margins of nearly 16%, which is much higher than the peers. Even for second quarter FY15, which is the recent numbers which is reported, sales was up 1%, but EBITDA was up 114% for this company. 114%. It is not 14%. But 114%. EBITDA margins were at 12.5% compared to 5.9% only, and profit of 10.3 crores compared to 1.9 crores, so a jump of nearly 6 times in terms of coming. So in the last 3-4 quarters, the company has been consistently giving good numbers.
So just one question, if I look at the stock, in July of last year, the stock fell from 80 to 50. Any reason for that?
This is a total restructuring case, okay? In 2012-13, there was a complete restructuring happened with the company. There's no institutional holder, in this company. The only reason is because people are now looking at the consistency of the numbers coming in. HDFC Securities have come up with a report on this, and they mentioned that the stock can trade at 120 rupees per share. The current price is 70 rupees per share. Even if we assume that we give, or HDFC Securities give a valuation of $60 per ton, which is actually 10% discount to the nearest competitor, which is Sanghi Industries, which is a comparable entity in Gujarat. Even if you go ahead and compare with Mangalam Cement, the fair value could be 90 per share. As I said, return on equity over 40%, no debt, cash-rich company. If you look at the debt in the last 3-4 years, it has come down from 120 crores to nil. So the debt has completely wiped off. What you should keep on your mind, keep an eye on the prices, cement prices in Gujarat. Quantity offtake could be important. Management action is another thing, and the dividend policy.
All right, that's plenty that you have packed into the reasons for looking at Saurashtra Cement. Remember, this is not a buy recommendation, but it's something that looks very compelling in terms of its fundamentals. Well, the markets have opened quite brightly in the green. The Sensex, normally a slow starter, right in the opening tick has started with almost 1/3% in terms of gains, as has the Nifty as well. So that's almost 0.5% coming in terms of gains. So markets recovering very quickly from yesterday's blow. And I don't know if I should read the gains just yet. They're coming in ONGC. One can understand that crude has been stubbornly high in the last 3-4 days. NTPC, Hindalco, HDFC, Tata Motors, Bank of Baroda. So a lot of the beleaguered, beaten down stocks are the ones where you're beginning to see a bit of gain. The rupee was as low as 66.61 yesterday in closing trades. It saw a big fall yesterday, and today opening at 66.50. So the dollar is 11 pies cheaper today. All across, it looks like yesterday the selling was overdone, and so today there is a bit of a recovery that you can see across the board. Let me quickly get to Rajat on the matter. Rajat, If it is indeed 7850, would that be a selling zone or a buying zone in early trades?
I would say that I would watch a bit, because initially you tend to see such upticks, but whether those upticks really last or not, I mean, that's why I have kept a small window, 7840 to about 7865. If the Nifty were to stay above that, then definitely I would expect further recovery to happen, and maybe a token buy position, in the sense that suppose if I were to buy say 100 shares, I would buy 25 shares, only 25%, and once it gets momentum, then you can actually increase your position on the buy side, because yesterday's had been a big fall with lot of volume, lot of position building in the F&O space. It is unlikely that immediately you will see a spike up and yesterday's fall would be neutralized. Actually, in January things don't happen like that. So I'm betting on the cycles to pan out, and where we might actually, I agree with Siddarth that maybe we are not heading for 7550 or even 7600 for that matter, because 7734 to about 7713 is a strong support area. Unless that is broken, not much fall can happen from here. But whether we are headed upwards, that's still the jury is still out on. I mean, it's not yet decided.
All right, well, the pre-opening rates have settled a bit higher, but you should be aware that many of these heavyweight stocks like SBI, PNB, L&T are sitting at fresh 52-week lows, so the recovery just pales in comparison to the kind of falls that these stocks have seen in the last many days. A couple of other stocks that could be in focus, names like Motherson Sumi, could be hit this morning. There is a bit of a downtick there after Volkswagen once again has been under the scanner. But Siddarth, thanks so much for giving us your views on the index and on individual names. We will, okay, Shubham, Shubham as well, thank you for joining us. Rajat and Prakash, I just request you to stay back for a bit longer till the markets open. Let's invite Udayan Mukherjee now on our show to tell us his views on the market. Udayan, hi, good morning, Happy New Year to you. It's not been a very happy New Year for the stock markets. What did you make of what took place yesterday, and is that a sign of the trend to come?